Here we go. Streaming live. Music on. Oh yeah.
Did you share your screen with me last time?
I did.
Yes.
Better?
I'm wondering why I'm sitting here not seeing. Yeah, better. Better. Let's check the tube. Is it the same link?
I don't know. Yeah, I think it works though. Let me know. Hello, people. Did the link work, Tom?
I think it's a different link.
I got people in the chat.
How did the people get to the chat? Did they follow the link or did they
Well, when we go live, it sends like a broadcast, like Breakfree Trading tonight. Yeah. Hey, hello, David, Keith.
Hey guys.
Makita, KW, Marvin, Richard. It's good. The link works, Tom.
No, the link doesn't work. The link keeps taking me to our last week's. Let me get it.
They will find it.
They'll find it. They're smart people.
They'll follow the music.
That's right.
All right, my people. Welcome to another episode with Tom and Asger. Tonight we're gonna do 30 minutes of streaming. So make sure you get your questions in, and we'll do everything we can to answer them. And I think the music is probably a bit too loud. There we go.
Yeah, it's a different link. It's a different link. We've deceived the people. Oh my goodness. It's all right. I'm fixing it.
That's good.
Here
I'm just gonna look at some. I'm gonna look at what's going on.
All right. What are we looking at?
I'm gonna look at the
Oh, the VIX.
CPO VIX, yeah.
That's nice.
Then we're gonna look at the SPX 500. Oh. And for good measure, let's just do a currency.
Yep. Hey Martin. How you doing, man?
Alright guys, so we got some volatility across the board. Look at this. Alright, so let's get an idea of what's going on here. So this is the CPO index for the volatility of the traded products on CPO. But in general, because that CPO has so many different trading products, obviously it will naturally reflect the actual entire market. So it's a great idea to get an understanding of like what is happening with the market. As you can see, just in the start of February, we had quite a boom in the WIX where it went from 20 to 37. So if we have a look, well, what happened around in these markets 1st December, and you'll see we have these two massive candles, and these two candles we have here, which is 4.5% for the SPX in 2 days, which is nuts. That's a massive amount. It's funny because it will always be blamed on like news events or whatever is the reason for something happened. In the end of the day, it's always the same thing. There's an imbalance in the market and it's being exploited. okay? And it's our job as a trader is to make sure that we are on the right side of that exploit, that we are not the one getting taken out of the market. We're the one who are profiting from all these people losing, okay? That is our job. And if you don't like taking money from other people, you should not trade, because that is what we're doing. We have to understand we are the very fucking elite in this game. We are here to take their money. And if you cannot live with this, then this is not the right place. And that's totally okay. But let's just be honest about it, okay? We're here to take other people's money because they're doing stupid shit in the markets, right? So let's have a look.
Well, there's no other way to make money in trading, right? You know, it's a zero-sum game. So someone has to lose for us to make money at the end of the day. And it's something you just have to understand and be okay with.
It is. So the way I like to think about this is that, well, what is happening, like if we look at SPX right now, and we know full well that it's just been in this ridiculous uptrend since the March last year, you know, when we had the COVID wipe out. And what we really see from that is that we just have a continuous trend, you know, and it's very simple, guys. This is just Federal Reserve just printing money, liquidity goes into the market, and it goes straight into the asset. Because money is inflating, US dollars inflating at 15% a year now. In the last year alone, the US dollar was inflated 40%. So people that have a lot of cash, they're looking to, where can I put my money so I don't lose purchase power in the next 5 years as they debase and inflate the dollar. That's what's happening, okay? So that's why you will see such ridiculous graph like this. And it's also why that you should not at all be surprised if this just go straight up. 7,000, why not 10,000? There's absolutely no reason at this point that this index can't go to 10,000, 20,000, 50,000, 100,000. There's no reason, because monetary policy is out of control and they can't stop it. They have no tools available to them anymore to control what's going on with the market and how money is being injected, okay?
The only tool was quantitative easing, and that's what we're doing right now, yeah? And it's pretty much run its course.
Exactly. That's what got us into this trouble in the first place. These tools that were supposed to be used here, to exactly create this sort of bounce, those tools have been used, I think,
never
since
stopped being used.
2016. Yeah, that's the problem. It just never got taken back off because, you know, America liked to see how it grew and how well its economy were doing and so on. And it did lead to a massive boom. It did lead to incredible technology breakthrough. So in many ways, you can completely justify how that this money was spent by the Federal Reserve. I mean, in a way, you have to ask yourself, well, is it not their job to make sure that, you know, humanity goes forward and innovates and creates new ideas? Yes, it is. But the problem is there's an inequality in how this money is being distributed. And the problem is the poor people are the ones who are the least beneficial to you know, what's been happening in the last years. It is purely for the rich. Absolutely. So, okay, so how do we become rich from this? Okay. Well, we have to understand what game we're in. What game we're in is that we're in a money inflating hyperinflation game. That's what we're in. Okay, well, what does that mean? Well, that means if we're in this game, all we have to do is every time the market comes down, it creates a dip here, we buy it. We just buy it. No questions about it, because we know that the Federal Reserve has our back. They'll print money, it will go up. So this brings me to my point. I was looking at the SPX and I was wondering, who fucked up here? And I can tell you who fucked up. The people that shorted into this level got completely fucked up and they are wrecked. And they are probably still holding, because there was a lot of like talks I saw a lot on Twitter, on TradingView, Facebook. I saw a lot of people suddenly talking about like market crash and so on. And what happens is that you just have like a new generation of traders that come into a market. They've never seen a market at hyperinflation before, and they just don't understand, how can it keep going up? How can this shit go up again and again and again? No market should behave like this, and that's true. No market should behave like this. But they cannot understand that it's not about how rational the market is. It is about your ability to execute on it. So we have to get on the same page, guys. And this page is we're buying the dips. And that is all you have to do. Now, how do we buy the dips? Well, guys, we created tools for you. We created tools for you that made it as easy as possible for you to identify the best markets where the most money is currently being funneled into, meaning the asset where the most US dollars is trying to get in, and it's just pumping that market, just buying as much as possible to avoid losing purchase power. And once we found those markets, which looks exactly like this, it is our job and our sole job to buy it, not short it, buy it. And that's it. And I know that
we've been banging on about this for a few weeks now, haven't we?
And we're going to continue to bang on about it because it is such an essential thing that we just have to understand that if we're going to succeed as a trader, it is only through trading with the trend, through following the big fish. Like, what are they doing? Okay, the big fish are buying this. Great. I'm going to make that my opportunity to make a lot of money. And that is what you can. Every single day you have these opportunities. So let's have a look at something else, Tom. You have any ideas?
Yeah, we were having a look at, when this volatility does come into the market, talking a little bit about correlations as well. Talking about risk on, risk off, things like that, and how multiple assets and different asset classes, different currencies, all sorts of things all become correlated when there's major volatility in the market. So when basically this VIX here that we were looking at spikes, that's kind of like the volatility reading is going up. That's when things become correlated at a very high rate. And this is kind of when you can get stopped out on a lot of trades all at once if you're trading those low time frames and you have too much exposure there. Would you agree with this? Yeah.
So let's try to find a good example, right? Let's try to find a good example. So we have
yeah, CK, you can ask a question here for sure.
Okay, so let's see if we can find a good date. How about just this recent February we had?
Yep.
I mean, not really. Let's see. I have a better idea. How about we look at like a really popular stock and we compare it to, like, Euro USD. This will probably help. Alright, and we'll skip this one in February and we'll have a look at June 19. June 19. Not really anything here. Right? June? Did I have it wrong? No. June 2020. That's funny. June 17. I'm not really seeing what I wanted to find here, Tom. Okay, so someone has a question about Euro New Zealand dollar. Sure, we can have a look at that. That's an interesting candle though. So I'm just looking at GBP USD here, and honestly, if this candle were to close like this, it's not necessarily the end of the trend, but it is a good indication that this could be like the top or something like that. So that's all it is. Whenever we have these pin tops like this, which is the same one that's looking like here, it is entirely possible that this market will come back to support just like it did here. But what's just important, and I have to repeat this because this is all you have to do, and I'm going to keep saying it for the rest of the year. Your job as a trader here is not to try to short this down, okay? Your job is not to try to get this downside here. Your job is to think like, if this trade even were to succeed in the first place, which is a shitty trade because you're trading against the trend, if this trade even were to succeed in the first place, well, in that case, I might as well just have been ready down here and take the trade in the opposite direction. That's really what you should be thinking about, because when you start shorting these markets against the trend, even though you have a good opportunity of downside, like you have a good opportunity of actually making that downside that you see as the reason you're putting on the short, you just shouldn't do it. Because once you get stuck in this short position, like here, there falls a tremendous stress with the fact that you back in your head entirely knows that this market is in a strong uptrend. And at any given point, it could just pump out of nowhere and just knock you out. And this is something that you might not think about is really a big deal. But trust me, when it's going to be in the back of your head, it's going to create stress and it will cloud your mind, and you'll just forget what it is that you're supposed to be doing in trading. So you need to stop trading against the trend. You need to stop doing this. And I see it all the time. It's just so important we stop doing this stuff and we start trading with the trend. You cannot be profitable in the long term with this. And it's just the sooner that you stop doing this, the sooner that you stop trading against the trend, the sooner you can expect to really this is going to be a real thing for you that can actually change your life. It's not going to change your life until you stop shorting the trend. I mean, against an uptrend. If you don't stop trading against the trend, you will not be profitable. You'll not be successful in trading. It will never happen. I guarantee you.
It's like going into the ocean and trying to stop the waves, right? You know, you're never going to stop those waves. All you can do is ride with the waves.
Well, so. Tom, I would rather compare it to something much more crazy. Like, let's say you want to cook. Let's say you want to cook potatoes, right? Your job is to cook potatoes. Well, what is required to cook potatoes? You need a fucking pot, and you need some water, maybe a little bit of salt, and then you need the potatoes, and you need to just pop them in and cook them. That's it. So what the fuck are you doing? Flying a fucking airplane. That's nothing to do with cooking. With cooking potatoes. Okay. My point is, these two things have nothing to do with trading. It has nothing to do with the goal we're trying to accomplish. It is completely separate. So we just need to stop that, guys. Okay, there's a bunch of questions, Tom.
There's so many questions. Yeah.
Let's go through them, and we'll take them.
All right, Marwin. Ant, to know your thought on this, please. So from what I've been seeing, I think the core strategy, find a strong trending market and buy the important levels in an uptrend, which is support, and vice versa. Yeah, exactly. So find a strong uptrending market like we've been talking about this whole time, SPX, Tesla, Bitcoin. Aussie dollar pairs have been pumping for the last pretty much, 6 to 12 months. That type of market, and then you're looking for support to buy off in that type of market, right? So yeah, you're right.
What?
Yes,
some people are confused about euro and New Zealand dollar. What is the problem here? There was a short here, or what?
Where's the question?
Can we talk what happened to euro and New Zealand dollar? Well, it just got nuked. It just got nuked just as expected. So if anyone was short on this, good job. That's all you got to do. What else we got?
Okay, Ryan's saying, should I always move the third TP to break even when TP 1 and 2 are hit?
Oh, I see. So
there was some chat about that I saw in one of our Telegram groups. So, I mean, you've got to assess if that trade comes back to the entry, then is it still a trade you'd be willing to take? Has it been repeated too many times? Is the price action still, looking good? Is it still a good trend to be buying in or a good trend to be selling in, that type of thing? And if you think that it is still a good trade to take, then you can place your other entries and try to take it again if it does come back to that, to your entry level. If you don't think it's still a good trade to take, then you can set your stop loss to break even. Yeah,
I think a lot of times people have to start thinking about what we're giving people, like a framework, and it's really good. And unless that you are master at this framework, you should not deviate from it. You should not try to change it. But at some point, when you have executed enough trades with our framework, you will be a master of that framework, and what will happen is that you'll be able to build on top of it at that point. But it requires you to become a master of it first. It's not like it's like trying to drive like a Formula 1 car. It's just because you have a driver license doesn't mean you can fucking control like 1,000,000 horsepower. Like, you just can't.
Yeah. I mean, if I thought you were going to talk about potatoes, boiling potatoes again, but I was hoping for a potato reference. Yeah, so in general, right, if you're new and you're asking the question, right, if you're asking the question, you should probably be setting the stop loss to break even.
Yes.
Okay? Taking the win, being happy with that on TP1 and 2, setting a stop loss to break even, so that if that market nukes straight through that entry level, then you get out there, you don't lose anything, whatever. If you've had a little bit of experience and you're in a position where you can comfortably say to yourself, if this comes back to my entry, then I would buy it again, or I would sell it again, or whatever, then that's when you can make that decision to reset your entries and go again at it if you want to. So, yeah, I think that's a good framework to work around. What else we got here?
Well, okay. So I'm profitable trading with and against the trend. No, you're not. You just don't know it yet. You're not. You will not. Listen to me. You will not be long-term profitable and succeed as a trader trading against the trend. You will not. And you will discover this yourself at some point. You can listen to my words because I did it for a long time. I'm probably the master, the fucking grandmaster of trading against trends. And I can tell you, it doesn't work. I chased my tails too long to see you guys fail like this. It's just if you're putting on a trade in a market where you really should be long on this market instead, then again you're not cooking potatoes. You're doing something that has nothing to do with what you should be doing in the kitchen. That has relation to cooking. Like it's nothing. It's not even close. And it's like you don't understand because it looks exactly like trading, but it's not. It's gambling. It's wishful gambling trying to trade against the trend. It's just so stupid because there's millions of algorithms out there just buying the dip every second. Like it's just like a liquidity pool that's just like constantly streaming into the market whenever it's long. Whenever the market is in uptrend. Now I'm not talking about market like this one right here, okay? This you could argue you could maybe short, but strong trending markets, you shouldn't fuck with that. If you fuck with it, you'll learn why you shouldn't fuck with it. Let's see. Netflix. So this is a good market, okay? So I like this. I like that there's established a trend here now, and this trend still has plenty of width between the alpha and the beta here before it's gonna collapse. So this is fine. That's a good strong trending market. I wouldn't short that. I wouldn't touch that. Let me show you something I want to short. Why don't you short this fucking gold rock? If you want to short something so bad, why don't you short a fucking gold rock that has fucking unlimited supply? Like there's no, it's like a shit coin basically. Like just short this gold rock if you want to short stuff. Like it's like it's fine if you're the kind of guy that likes shorting instead of longing. That's okay. It usually means that you feel more like a contrarian trader, and that's perfectly okay. But you just gotta understand, you gotta use your skill set in the right environment. If you're doing this in the wrong environment, you'll get punished, and it will lead you to believe that what you're doing is profitable and it will work for you long term. And then God forbid that you scale up and you put in, let's say, $1 million, or somehow you access $1 million of capital, and very, very fast you will discover why you should never trade against the trend. Like it just doesn't work.
Eric is asking if we could share about the percentages on RTD. How do we read this in relation to the trade? So
sure.
It's like a relative indicator to past trends in that market, yeah? So the strength of the RTD previously, that percentage is kind of like the relative value of the current RTD versus what it was previously, yeah?
Yeah. So we measure across the market how it has been expanding and contracting for many months, and then we look at just how different the trend is trading compared to how it used to, and we just use those values and to kind of look at like measuring them against each other and see like how strong is this downward pressure compared to how strong the upward pressure was. And usually that gives us a really good indication of like whether the market is in like uptrend or downtrend. As you can see here with gold, rock, and euro, it's just it's just been extremely weak for a long time, and it keeps having these fake outs. It keeps having these fake outs. But the actual value. So let's talk about the value. A strong trend is established once this value is above 120, I believe it is. A weak value is below 40. Between 40 and 70 is the average, and 7 to 120 is, what is that? I remember strong, high, something like that. It's in the it's on our front page. It's in the change log.
The percentages.
How can we go with the fact that a lot of times we can't get to buy those dips because most times it won't reach? That's not true at all. No. That's just because that you've been executing on the wrong levels. You don't know which one to execute on. So here's the thing, guys. It all depends on the time frames. Okay. So if I trade on 15-minute time frame, then the
gold rock's getting nuked, man. Holy.
It's a rock. It's a fucking rock. Of course it will go down. But yeah. So my job as a trader here is not to buy this now because it's going down. My job as a trader is to find a good entry on this gold rock. And that's not this direction. It is this direction. So we want to short this down.
We were talking about going across time frames and looking at the alignment levels across different time frames. Because Marwin says that the price never gets to the 75% or 100% alignment levels.
Okay. So look at this right now. This market currently is trading into 100% alignment. And sometimes the market will not do this. Okay, let me try to put this a better way. Sometimes these trades will not get filled. And that's completely okay. You basically have to understand, when we're putting on our trades, we trade fundamentally different from everyone else in the market. Everyone else is like fucking retards that's just like chasing this market, and it's like, oh, look at this, the support is breaking, I better short into support now like a fucking idiot. Our job is to recognize that this marketplace is filled with idiots and take advantage of it, and that requires waiting for them to make mistakes. So that means we are not going to short this. We will short this if it comes back up to this level, then we will short it, and if it doesn't get back to this level, then we don't care, because the idiots didn't make the mistakes required for us to make money. It's like having a shop, guys, okay? You have a shop and you have people walking in. Some days there will be no people walking into your business and buying your stuff. That's okay. They'll be there the next day. Your job as a shop is to be there when they decide to show up. And when they decide to show up in your shop and say, hey, I'm ready to pay you money because I'm an idiot, you take that money. And you keep taking that money until you're rich. Okay.
Let's get back to the 75 and 100% alignment. On this one, Asger, on Gold Rock Euro, go to like 4 hour or 1 day, and we'll probably see that there won't be a 75. Yeah, okay, cool. So this is a good example, right? So on the 1 hour time frame, we were sitting pretty much right on a 75% alignment support level. But that same level on the 4 hour time frame is not fully developed yet. So it's actually only the 1S all the way to the right. So like the weakest kind of S level, you could call it. But if you're changing between time frames, you're going to see that, these 75% and 100% alignment levels move around across different time frames. So it's all about what time frame you're trading on as well. So these 75% and 100% alignment levels, saying that they don't get hit is just simply not true, because they do get hit. They get hit all the time. Every moment that the market's moving, these levels are being hit. It just depends on what time frame they're being hit. There we go.
Yeah.
Answered.
Good job. No, but it's very true. It's very true. Like look, I just marked out all the important levels, right? So this is gold rock. Oh, yeah. We have support at 1375. Some resistance here. Now all these different levels will show the same if we go roughly, usually. But after, so what you're gonna see? No, what you're gonna see is that in a moment, if it hits extension 2, there's gonna be a new level down here. This will be the new support level, and that support level is adapted from the 1 hour or on the 1 hour. This will be a neutral, and a follower will probably also be
Yep, that's the level I was just talking about. Yeah, exactly.
It really depends on how the market moves. So you have to understand, why do these levels change differently, and why, why is it so dynamic? Well, it depends how the market moves into the levels. If the market here right now would just wick in straight, like it would just nuke straight into this levels shortly, like just a wick or something like that, that would make this a very strong level already, because this is already marked out as an important level. Now, if the market comes down and it bounces off this level, it will be an even more significant strong level. And that's all done by X mode. Yeah.
Honestly, like, okay, I remember when you showed me X mode for the first time, right?
Yeah.
Years ago, a couple of years ago now, you showed me X mode for the first time. And it was just a matter of me looking at what was going on in X mode and watching how it changed as different candles came into the, as different candles played out.
Yeah.
That made me understand it. I couldn't be told, really, and you knew that I couldn't be told, so you didn't tell me anything.
I couldn't.
You just said yeah.
I was like, Tom, just look at it, okay?
Just look at it, yeah. Just watch it, and then I'm like, all right, cool. So it's just a matter of watching how every single candle, as it kind of plays out, how these X mode levels move, and then you'll get an understanding of what's happening here, right? You'll get an understanding, and eventually you'll be able to kind of almost front run X mode and kind of go, well, if this candle does something like this, then X mode will probably look something like that. And you kind of get an understanding of what it's going to look like before it even looks like that. It's definitely a good few weekends of
That's really well put. And this is the same thing that happens when you play chess for a long time. When you start playing chess for a long time, you start being able to look ahead of like what potential scenarios, what potential outcomes are available right now, right? And depending on that, you will start to create an intelligence inside your head of when you want to take these trades and when you don't want to take these trades, depending on how the price action was and how X mode adapted to it and how the trend was at the same time. And I promise you do this for long enough, it really is going to start to click. I can see it with my girlfriend. It's been nearly 1 year now that she's been trading. She's trading on an account, that I funded for her as well. She's doing really good. And that was just a matter, like it just took time. She just needed time to see enough price action, see enough opportunities to play out, to start to get like a filter of when she could take X mode trades and when she could do strategy mode trades. And she still get burned, but she don't get burned hard that she lose like a large amount of the account. She takes those 1%, 2%, sometimes 3% losses, but she just keep going. She just keep rocking ahead. That's really all you have to do to make it as a trader. So you just keep putting on these trades, so you get an idea of like what is likely to happen here. And because I've seen this setup such a long time, and because I know what the trend is doing right now, I can tell you what a likely scenario right now would be something like this. That's what I can tell you. I can tell you that's a very likely scenario for the market to do that, just based on how this candle is playing out. And if we go, if we really dive into it, I can also say, well, that's a possible scenario here on the 15-minute time frame. But I can also say that if the market goes below this, I can with great confidence say that it's definitely gonna move lower. So what does this? That's a great arrow. what does this matter? What does this matter? Because I'm not even thinking about buying this market. Well, what could I be thinking about? There's only one thing I should be thinking about in this market, and that would be like shorting it from here. Right? That would be the only thing with the current time frame I'm looking at, is like shorting it at here. Okay, if that's not gonna work, then I'm gonna be shorting it from here. Oh, that's the fucking fib tool.
Yeah.
I'm gonna be shorting it from here instead, right? That's the only.
Yeah, exactly.
That's the only thoughts that I really have, is that, well, if I get stopped out of this, well, then I'm just gonna short it again, because it's a shiny rock. It's gonna drop, It's just a gold. It's a shiny rock. No one cares about it.
That's it. So yeah, I mean, what you're doing here is you're kind of creating your thesis on the chart and building your if-then statement based around what X mode is telling you right now. And then as this plays out, you'll make a decision whether or not you actually execute on this thesis.
Exactly.
as the price approaches that level, basically.
Yeah.
And you're watching how the price action is looking as the price approaches that level on these lower time frames. On the higher time frames, that's why you're in quite a safe environment trading the higher time frames. And I bang on all the time that new traders need to start at 1 day for sure, and then maybe venture into 4 hours as well, because how the price action and how these candles actually are playing out on that higher time frame doesn't matter as much as on the lower time frame. You can rest assured that long-term trend that we've identified that we're trading with, because we know we're trading with the trend, and that good level that we've identified on the 1 day time frame is an incredibly important level, because it's been around there for a very, very long time.
Yeah.
So we have a lot of confidence to be taking this trade off that level with those strategy mode trades on the high time frames.
Exactly. Well, I also think it's worth noting now that we're talking about like 1 day time frame versus 15 minute. Like you can't even see the trade on 1 day time frame. That's how fast it really moves on 15-minute time frame. Like you can't even see it. But that was the trade, up, down, and to here. And this is entirely possible. You can see within this daily candle, it could easily retract up here and then go down here in the same day, right? It could easily happen.
For sure, easily. And it's not going to mean anything for your 1 day trade setup that you've got placed there, nothing at all.
No.
If that plays out in this 15-minute time frame, it's going to mean absolutely nothing. So
that would be great. Something like that. And even better, like the ultimate, like if I had to shot it up here, and the ultimate way it would get there, what I would like to see would look something like this. Let me just mark it up. The ultimate setup we could really have here would be a bear flag being created into the support, just slowly grinding it away, like a, what is it called? Like a, let's see. So we need something like this. Sandpaper. Yes. Sandpaper, Tom. That was sandpaper I was talking about. So this is like really like the ultimate I would like to see is, just like really shitty price action, just like people just fucking getting destroyed and then straight to my TP, right? That's what I would love to see. I would love nothing more on 15-minute time frame, if I am to short this market, to just see people just FOMO selling, FOMO buying, FOMO selling, FOMO buying into my entry and then dump it. That would be great. So let them do this. And if they do this, and on these conditions, that these people walk this very specific path that draws a bear flag into support, I would be happy to short it. I will take every single cent. And that's all. And if they don't do it, fine. That's fine. Go find some other people that's making mistakes. That's so many of them. And actually we built this tool called Sona. All Sona is doing is finding retards all day that's making mistakes in the market that we can profit from. Like here, look at EURCHF. Look at how strong this trend is. Look at that.
I mean, this is that same price action we talked about last week as well. Oh, we're out of it. Okay. Oh, wait. What are you doing?
I'll go back in. Sorry, Tom.
Yeah, that's okay.
Here we go.
Okay, so the bull pennant into resistance.
Mm-hmm. It's
right?
The same thing.
Fakes out the buyers, punches into support.
Yeah.
Fucking hell. Honestly, this shit just repeats itself over and over and over again.
Yeah.
And it's honestly, it's when you see this, right?
Mm-hmm.
Because you've got to understand, like, I only see this because of doing all that work, watching X mode over and over and over again, replay function, and in live markets as well for years. That's the only reason why I see this here. You don't expect to see this type of thing if you've been trading for a month, right? Mm-hmm. Don't expect to see this. Mm-hmm. But just understand that our strategy mode right here on the 1 hour time frame is giving you exactly what, a seasoned trader is going to see and what they're going to execute.
Yeah, and even for a seasoned trader, it's so easy for them to fuck up the execution. It's just so easy to get it wrong, to size it wrong, to get in too early, to just do all this stuff. So we really just try to design it as, how can we design the most friendly thing that can help people make money in trading? And no, these opportunities, sometimes they're not going to last a long time, but often it is like this in trading. The best opportunities in trading, they last a fraction of a second. You don't even have time to market buy it. That's why we need to be prepared. We need to have these order already placed. We need based on what's going on, we need to say, if this happens, this scenario, which it might not do, but if it does, I will be there and I'll be ready to buy what these guys are selling and to support, because this market is strong and there's absolutely no reason I shouldn't do it. Okay, that's what we need to be doing. And there's many ways you can trade. There's many ways you can do signals and whatever. But I promise you, this will make you money, and this works. You saw I put on this AUD cat trade. Look at that. I'm making money again, Tom.
Here we go.
Yeah. But
come on.
It's just, no, it doesn't always work. Sometimes it just, sometimes there's a guy who just decides, okay, fuck it, I'm just gonna sell 5,000 lots of Euro CHF at the same second, right? And you just get nuked, and that's a cost of doing business. But for the vast majority of the time, these trades, they play out and they give you really good opportunity. And trust me, if the trades are not there, it's not just because that there's not trades available, it's because all of the trades are fucking shit trades you shouldn't be involved in. If you guys just want trades, like if you just want as many trades as possible, it's no problem. We can generate you a list of C- shit trades. It's not a problem to generate fucking terrible trades. What's difficult is finding good trades that you guys can execute on, and that is what we're doing for you, and it fucking works. So you just have to use it. We have so many exciting things in the work right now in the background that's coming out, and it's awesome. And we're doing it because we can see this works for people. It's making people results, but also because we can see there's a lot of people trading. There's a lot more people trading than there were last year, and they definitely need help, especially because we haven't had the big liquidation events of this year yet. The year is still young, but it will come. And when those liquidation times come, those who are not managing their risk will get fucked. The Breakfree traders who are just following our trading system will do just fine. You'll probably even make money.
Yeah, definitely. For sure. All right, we let the questions pile up again.
Okay.
All right. We got someone saying, can you answer my question? But all I can see is chat about potatoes. So put your question in and we'll answer it. For X mode, your trade would be from N to the extension or the support resistance. Oh, that wasn't that market we were looking at before. Sorry, we missed that one. How long does it take for trades to play? I've seen this question a lot lately. I've seen it a lot. How long does it take for the daily does the daily time frame take? How long does it take for a trade to get entered? How long does it take for it to play out? What you have to understand, right, is that these trades on any of these time frames may never catch an entry. They may never catch an entry. All we're doing is we're saying that if the price does get back to this point, then we will buy it, right? That's all we're saying, okay? We're not saying that the price will come down here and then go up from there. All we're saying is that if by some, whether it's a miracle or whatever, the price does come down, hit our entry, then we will buy. That's exactly. So the answer to that question, which I see a lot, is perhaps never. It may never get entered.
But if it does hit, you'll probably be very happy it does. And you'll most likely make money from that trade. Like you most likely will. And you will lose some of those trades as well, for sure. But these trades are seriously your absolute best chance of making money in the market. So they're just so good. Like the way that we detect these sauna trades, like you probably noticed, it's rarely that these trades have been repeated. And it is because that we're looking for like a really fresh price action signature in the market, where we can say with confidence, we haven't really seen this before. This is a great deviation. A deviation meaning that something is happening that should not really be happening in this market. And once we have those really good deviations, that's where we just want to buy it. It's our absolute best chance to make money. Maybe we'll lose money, but it's a really good trade, so we'll take it. There's no reason not to. Have a look at AUD and $7. So people just said that no trades this week. Well, look at this. This looked like a trade.
Cool. Okay, so Madeline Rivera. So this is, can you answer my question? I've got the question. if the trend's going up on daily, do I have to trade with the trend?
Fuck!
What the? Oh!
Yes.
It would be nice, yeah.
If the trend is up, there's only one thing you're gonna do, and that is buy the green box. If the trend is down, there's only one thing you gotta do, and that is sell the red box from Sona. It's just there's no more to it.
Yeah. No, but yes, trading with the trend is the fundamental basis of everything we do. So.
But it's not being pierced clear enough, Tom. Clearly, we're not doing good enough job.
Yeah.
No, but it's very clear we're not doing good enough job for communicating this to people that this is the single thing you need to be doing. Trading with the trend. That's the single thing you need to be doing. Don't try to catch short trade in between or something like that. You gotta buy these boxes to come up. If there are no trades in Sona, if there's no trades in Sona, you likely shouldn't be taking any trades. Like you have to understand, a big part of trading is just doing nothing. Like vast majority of the time, you're just not doing anything. You're just waiting for people to make mistakes so you can make money from that. And the best way to do that is exactly to find the people who are willing to trade against a strong trend and short into support. Those kind of people who do that, they're really like a special kind of human. And that is your golden opportunity to make money. And that's what you gotta do. USD JPY doesn't make another high. I mean, who knows? Probably it's an uptrend. It doesn't matter. What I do know, I don't know if it's gonna do that. It looks likely, but what I do know is that if the market comes into this green box, I will be buying it. Tom, that's it.
Definitely. That's it. It's the if-then statement. The if-then statement is everything. Okay. Everything. Yeah. It's all based around the if-then statement. Okay? If the price enters the box, then we will buy. We have no fucking idea whether it's going to go up, down, or sideways now. All we know is that if it hits our green box, then we buy it.
That's it. And it sounds really simple, but it's just like a mantra you just gotta burn into your mind, because this is the realization that I have come to after just chasing these markets, for a long time at the start of my trading career, and it's extremely unprofitable. It is deadly unprofitable. You make no money like this, and when you do make money, it costs you even more money, because it leads you to the belief that you can do this and you can trade against everyone else, and you are right and you are winning, and it puts this like God mentality in your head. And God forbid that you have access to real capital, because you will absolutely destroy yourself. 100%. For me, TTT helped me set expectation and prioritize my trades. I love to see it back in BFT panel. But the thing is, Mark, what it did not, I will tell you what it did not do. It did not let you in on these trades, which are unlikely to happen. But if they do happen, they are like free money. Like this. If USD JPY right now, this very second, just were to sell off, I would be guaranteed a profit of 2% nearly instant. Instant.
Yeah, so what basically Asger's saying here is like, if some shit just happens, right, in USD JPY, it just nukes right now, wicks straight into that entry in one big candle and then back up to our TP1, 2, and 3.
Yep.
Then we miss that if we're trading because TTE is telling me that it's
14 candles away.
14 candles away, so I'm just not going to place it, right?
That's the
because
mistake.
We miss out on those like incredible candles that just wick off our level and go straight and hit our take profits within like an hour, right?
And these trades really matter. These trades on your bottom line as a trader, they really add up throughout the year. So you cannot afford to miss these trades. Your job is to be fishing for this and be prepared for it while maintaining risk. You gotta fish, okay?
This happened in BTC the other day. Yeah, it did.
Exactly. It did.
Thank you for giving us something to
No, but it's very true. It's true. It did. It was beautiful. It was very giving, It's very
CK
giving.
had some big questions here, a couple of paragraphs. Hope this isn't potato. Question about X mode. Having understood price action, the need to detect strong trends and confirm it with RTD, may I know if we need to adjust the stop loss? Okay. Do we stretch it to the stronger confluence level and then readjust the TPs to 1 to 7 risk to reward? Or do we simply decide entry and exit points using the position tool and just leave the stop loss alone? Honestly, I mean, you can just leave the stop loss alone because this is the fundamental structure that the market trades around anyway, which is what X mode is identifying for you, right? So when you target those levels with the 1.7 risk to reward ratio, it puts your stop loss just below kind of another important level in that market, basically, as a little bit of protection. Am I right here? I mean, you're the guy
Yeah,
who...
yeah. No,
you're the X
absolutely.
mode god. Yeah.
So I just wanted to find an example, right? So
Yep.
if we have Apple here, it could be any market, right? Any market, and we're looking to short this. It's in a downtrend. There's no reason we can't short this, right? But people don't want to short Apple because it sounds dangerous. They want to short uptrending markets, but they don't want to short fucking Apple. Look, it just happened to be that when you put your position tool the right way and you execute your trades directly on the levels, your stop loss with a 1.7 risk reward will be perfectly put where it should be. I can tell you, even like, and this is why it's so fucking beautiful, is that I can just put this and I know that this is actually like a really, really reasonable stop loss to have here. I don't want it here. I want it a little bit higher. If I had it right here, look at that. I will show you. Okay. That is where probably a traditional noob trader would have his stop loss. He would have it here. Now notice how our stop loss is up here. Not only beyond the resistance, it has a little bit of wiggle room, okay? And that is the best we can do to set expectations for slippage and spread and wicks and whatever can happen. It can happen that we just get wigged out on an entry and that's unlucky. But we do not, the reason we have a stop loss in the first place because we cannot tell when a wick, let's just say Apple filled the entries and then it did like this. We cannot tell when this wick or this entry here becomes 100% or 50% candle, or it just goes like this. You will never be able to find out this. And that's why we have hard stop losses and we execute on them, because you cannot, you simply do not know when a wick into your stop loss turns into a 50% candle, 100% candle. Okay.
Yeah. So in general, if you're, again, if you're asking that question, you're starting out, you've got this understanding and you're trading X mode, right? You're pretty safe just leaving it at 1.7. Okay.
Yeah.
Now I think the question maybe came up because last week we played around with the higher risk to reward trades a little bit. Mm-hmm. Now that just is based off the particular price action of the market and that market structure in particular that made Asger want to take this higher risk to reward trade, basically. So
let's go over that one more time, right? These trades are not easy to execute, and these trades you will most likely not execute correctly. What you have to understand is that when we're talking about X mode, we're talking about RTD, we're talking about this trading methodology that we're using here. You have to understand this is a framework. It's a professional framework that's extremely efficient at catching people when they're doing stupid stuff, because we see the levels for what they are. As long as we're executing on them, we'll be good. Now, when you get really, really good at this and you really start to grasp a market, let me see if I can find something that's like really dying today. Here, Zoom. Oh, I see. So let's say I had been trading Zoom and I have a good feeling of the price action, right? I feel like I know this market. Maybe I have been trading it for a year, maybe 2 years. Maybe I've been running it since the bull market started for this, right? I don't know what that happened. Strange. Anyway, what I will be able to is that at some point I will be able to put trades together where I can say with extremely great confidence, I have to fix that.
Yeah. Yeah.
Let me see what I have. Let's see what I have.
A good
Microsoft. Oh, Morgan Stanley. That's not Microsoft. That's not Microsoft. Here we go.
Nasdaq, yeah, that one.
Okay, anyway, this is a better example. We have an uptrending market here, and what I can do when I have confidence enough in a market, and I've been, I spent at least a few years getting to this point, is that I'm able to put these trades together where I'm really narrowing my invalidation point for the trade. Like, this is extremely risky. There's such a high chance that you get stopped out of these trades. But the point is, there's also times where you can put these trades on with great confidence, and you're able to risk, a very little amount while still getting a huge upside, and you can crank it up with leverage. But it takes a long time to get to this point, and you will fail many times getting to this point. But that is the top tier when you get to this, and it takes time, and you'll trick yourself into believing many times on your journey towards this master of a trader. You'll trick yourself into believing that you have already arrived at your destination when you've just begun your journey. So don't kid yourself. And just because you've done it for 10 years, it doesn't mean, like, you need screen time. You need auto execution. Just because you've been staying at a screen doesn't mean you're good at it. And you have to be brutal honest with yourself. If you're not brutal honest with yourself, it's going to cost you capital. It can potentially cost you everything if you're in the wrong belief of what you're capable of as a trader. And I'll tell you, the brutal and honest truth to your trading will be set in your P&L. In your P&L, it will tell you whether you have reached this point or not. If you're negative, you're not here. You're not even close. Okay, so it's just, and do not lead yourself into the belief that you are master at something that you're not. It will be extremely expensive for you. Okay. Yep. Okay. Last questions. Let's do the last questions, Tom.
Yeah, last questions. Get them in. Marwin, for the 1 hour Euro CHF, is it okay even if on the 1 day time frame we are buying into resistance?
Let's have a look. Okay, so let's. I understand you say that, and technically, from a point of view of 1 day time frame, yes, this is resistance. So on a 1 day time frame trade, you would not execute it here, but that's also because that on a 1 time frame trade, the trade would be looking like this instead. That would be the 1 day time frame trade. So it doesn't make sense to buy here yet. It's too early for this time frame. But if we go to 1 hour where this trade is executed, you will see it looks completely different. And that is because that on 1 hour time frame, this is a completely different world. It is entirely possible for this market to move down here and up. And all it takes for this resistance to change into neutral, the last one here, is that the market consolidates long enough above the resistance, or it hits extension 2.
Yeah.
Can we have a simple wrap up for all of the BFT family?
Simple course of action.
Oh.
Buy support in uptrends, sell resistance in downtrends. Let me add strong as a caveat into there as well.
Yeah. Find these strong trending markets, buy the pullbacks. Whatever time frame you're trading on, buy the pullbacks. Understand, when you're trading on lower time frame, you will lose more and you will win more. That means you'll execute more trades. And it's entirely possible when you're trading 15-minute time frames that you'll take 10 losses on your first day or your first week or your first month, simply because you don't understand that when you're taking 15-minute trades, especially if you do it across multiple assets at the same time, you don't understand that they're actually correlated. And that means that you'll be putting on too much risk on these trades. Mm-hmm. And we're trying to fix this, but it's hard.
Yeah. 1.7 ratio works only if you have 3 entries. Small accounts can only take 1 entry. Stop loss is too large otherwise. Yeah. Okay. So if you've got a small account, enter 1 and 3. If it's that small that you can't enter 1 and 3, go back to a demo account. Stack some cash and then deposit it.
It's best to do this with scaling, but for the actually 1-to-7 ratio, if it works, it's not about that's not about the compounding multiple orders. It's just about the ratio of each trade, how it's structured. Okay. All right, guys. If you like this, that's great. We'll keep doing it, and it's fun for us as well.
It is.
Like, guys, it's just, you know, I know how great and fun it is to trade against the trend and get some, you know, little trades in here and there, and not doing it. But what I have discovered through my trading career is that it completely removes the focus of what it is that you need to be doing as a trader, and it rewards, you know, bad behavior. It's just like if you have a dog, you know, you have a dog and you're treating your dog is doing something bad, and you're not telling it that it's doing something bad. It's not gonna learn anything. The only problem here is that you are your own dog. Okay, and you really gotta grasp this, that you have to understand, like, emotionally in your head, what you're dealing with here is something that's, you know, 10,000 years old. It was designed to fucking walk on the ground and catch, I don't know, boars in the wild, you know, with spears and so on. You're an aiming creature. You're an aiming creature that's designed to fucking walk around with stones and crack nuts and berries and whatever. That's what you're made for. And here we are in 2021, and you're not ready for it. And all of this technology and all of this, how it mixes in with your brain and the mistakes that you make, everything that you do is amplified in trading, and it will come out. If you are not scared of yourself as a trader, it's because you don't know what you're capable of yet. And you will get to a point where you're scared of you as a trader. And that is something to do with respecting yourself and the damage that you're capable of doing to yourself through trading. You have to understand this. And the sooner you accept that you're just a simple human who are so vulnerable to making mistakes all the time, the sooner that you accept this and give into it and just understand that all you got to do is what we're telling you. Buy these strong trending markets, buy the dips. If you like to short, then find the strong downtrending market, go short the fucking gold rock. This is what you gotta do. Until you change this, you will not be a profitable trader. The sooner that you embrace this idea, the faster you will get to, you know, the journey and the money amount that you want to get to. All right, guys.
That's it.
It's been a pleasure.
Thanks, guys. It's been awesome. Thank you. Thanks for watching. Asger, it's been fun as always, mate.
All right, guys. Take care, everyone. Bye-bye.
Bye.